All right. We have people that are joining us now. We'll wait for everybody to get logged in here. All right. People still coming on here. We'll give them a few minutes to get in here. All right. Looks like we've got most of the people that have logged in here. We'll go ahead and get started. Welcome to this QFloors webinar today. Chad Ogden, I'm president of QFloors, and we have some of our experts joining us today to help us through this webinar. This webinar is directed or is going to cover what we call our year-end or period-end procedures, which is making sure that our accounting and that our books are prepared and that we're doing the right things to prepare for the end of the year so that we can get our taxes done. Now, that's my way of saying it. We may have some of our experts here that might say it a little bit differently. I don't know. But we have with us today Kristy Hayek, who is our Director of Client Services, and Ron Cluff, who is our Director of Accounting Services. So these guys are the experts. They've been doing this for a long time. They know what they're doing. And so we'll let them take us kind of through what's going on. We have a chat that you can log questions to. So we'll stop, and as people have questions about certain things, we can answer those as we're doing it here. And we'll go as long as this takes. So we want to make sure that people, that everyone has the information that they need to get this done. Now's a good time to start thinking about this so that you're not running up against the end of the year. So with that quick introduction, I think we'll turn kind of the direction over here to Kristy, and she'll kind of lead us through here.
All right. Hello, everybody. End of period procedures is one of my favorite things to talk about. I know it's one of the most maybe daunting things that we have you do here. I talk to a lot of customers, and it's a kind of a long document. There's a lot of instructions, and we point you to this document, and I know it can be a little bit overwhelming at a glance. And so I like to talk to people on the phone and kind of get you started. So that's what we're going to do in this webinar. I'm going to kind of point out things and go over the first few steps and just kind of get you started on what you need to do in your QFloors to make sure that you're doing all of these end of period procedures. I think it's the best way to learn QFloors and make sure that you're dotting all the I's and crossing all the T's. So all the things that you're not sure if you're doing it, this is how we can make sure that you're doing all the things that we want you doing in QFloors. So I do have the end of period procedures pulled up from our website here. So when you're on qfloors.com under knowledge base, we have our end of period procedures under the accounting section. There's the regular end of period procedures document. This is the one we're going to go over. It's the full instructions. It's more detailed. We go over some information here. So if you have a problem, there's some instructions in here on what to look for to fix it. And then once you get the hang of it, we have our short procedures. And so basically they're the same thing. It's just an abbreviated document. We try to keep it a little bit shorter. It has the basic same steps, but if you're going through that document and you run into a problem, it's going to point you back to this full document. So that has all the steps on how to fix things. And sometimes it takes, maybe giving us a phone call and letting us look at it with you.
So let me, this is support.qfloors.com. That's the website, right?
Mm-hmm.
So you got to go and don't go to QFloors.com, go unless there's a button out on QFloors.com that you can press. But you actually have to log into this website with your username and password to get to here. So if you don't know how to log in at that login screen, you're going to need to call our support department. See that where it says support there? Go ahead and click support login right there. So if you don't know the username and password to log in, you'll need to call us to get into here to be able to get to this document.
And then, Ron, before we dive into this document, was there something that you wanted to go over, just talking about when to do end of period procedures, why to do them, introducing the end of period procedures?
Yeah, why to do them up front. The goal ultimately is that you have accurate financial statements so that you can print those out or print them to PDF, send them to your accountant to prepare your tax returns, and especially for you to weekly, monthly, quarterly to analyze those financials with your financial analyst, your accountant, whoever is helping you with that, to look at those and be able to make decisions, educated decisions, wise decisions based on accurate financial information. So part of that is these end of period procedures will help you reconcile certain accounting QFloors to make sure that they are correct. Really, it's just looking for problem transactions in the software, whether you or someone on your team did something incorrect or the software might have. So we want to find those, fix them, and move forward. There are other balances in your accounting reports that you and your accountant will need to look at. That's when you're finished with the end of period procedures, you submit financials to the accountant. They should be reviewing those for anything that stands out that looks incorrect to them, and then submit your tax return. You can always call us, Trent or myself, and look at your financials and give you an idea of some things that you might want to talk about with your accountant that looks to be a problem. We can help you with certain things. And then when to do them, really you can do them at any time during the year, any day of the week, any month. It's end of period, so that could be end of month, end of quarter, end of year. Typically, especially end of year, you want to do these to get your, as I said, get your financials ready for taxes. But we have some customers that will do them monthly just to check things and make sure that everything's moving forward correctly to the next period. You need to do these monthly if you're submitting financials to a bank for a line of credit or to anyone, something official where you don't want those numbers to change. You need to do these end of period procedures, make sure everything's fixed, and then close the journal for that month, that prior month that you're submitting. And Kristy will talk about closing the period later in this webinar. Okay, thanks.
Yeah, and so if you've never done these procedures, you definitely want to start with the full document and make sure that you're going through all of the steps that we have. If you are going to be doing a monthly, that's probably when you would switch over to the short procedures. As you get more familiar with them, you get the hang of it. You could kind of just go through these short procedures. And then again, if you run into a problem, it still points you back to the full document.
Let me say on that short one, once you've done the full end of period procedures, you can do the short procedures from that point forward, and just because it has you skip some steps, you're just going to run the tool and just check some things, and if something's wrong, go back to the full procedures and do that. So once you've had a GL conversion where we've adjusted your balances or you've adjusted your balances to match a particular time period, that's key. If you haven't had that done, if your financials have never been adjusted to match the official accountant's balances as of some point, let's talk. But once that's been done and these end of period procedures are done, then you can do the short procedures moving forward.
Yeah, and we should say this time of year, especially going into as we get closer to December, our call volume is really high. So plan ahead as you're going through some of these procedures. We'll talk about need to be done before the end of the year. Some of them don't need to be done until, anytime now or after the end of the year. But I just want to point out that you don't need to call in and ask for an appointment. This is something you can just call in and, we can talk to you about where to get started, help you go through the first couple steps and give you some homework to do on your own, and then call in as you're running into questions. And so I just want to point out that you really don't need an appointment to go through this, that we're set up just to have you call in. So there are some important preliminary tasks that we want to go through. The first couple steps here are going to talk about reading through these documents, read through a procedure before doing it, make sure you know what to look for and what you're doing. There are two that need to be done before the end of the year. And so the inventory and the contract labor payable. So we do have an inventory reconciliation, so we're going to talk about that. You'll want to do a physical count, those kind of things you want to do before the end of the year. And then if you're using this feature called contract labor payable, post labor on completion, you want to make sure that you're doing that one before the end of the year. So I'm going to pull up a QFloors here just to point that out. We go up here to setup and then miscellaneous. This feature right here is checked. So this one here is called post labor on sale completion. This has to do with paying your contractor installers and job costing. It triggers the labor expense to get job costed in the same journal entry as the sale revenue. And so it's a feature that we like and we do recommend using it. So if you have this box checked, that means you do need to do this contract labor reconciliation that's we're going to talk about. And that's one you want to do before the end of the year.
And almost everyone should have that turned on. The only cases that I can think of right now where you wouldn't is if you have employee installers, none of your installers are subcontractors. Might be some other rare situation where you don't want it on. That's extremely rare. That should be turned on. Read the knowledge base article about it. Call our client services team if not.
Yep, and if you've been using QFloors and paying installers, you don't want to just go turn it on. You definitely want to follow the knowledge base article we have about turning that on. It's also a good time to check to make sure that you're on the updated version of QFloors. And so this step 4 here talks about how to check that. So we're just going to go into QFloors and click Help and About QFloors. And so you want to just check the version. You should be on at least the official release, which is 9.144 or later. And so we just want to double check that, make sure you're on a current version.
We will be putting out a new official release here, probably about 1st of December. So sometime in that time frame, 1st to mid-December. So.
And then we want to make sure that under company information, we want to make sure that we're set up with the correct month for your fiscal year. So if we go to setup and company information, right here, January is the first month of my fiscal year for this database. So most companies, it's 12/31 is the end of the year. Some it can definitely be a different time. I've seen them, in September. So just make sure that that's set up for the first month of your fiscal year. So that's kind of just a spot check. Step 6. This is the number one most important step, I think. This is the first step of all the other steps. And so this step is going to talk about making sure we're caught up in job costing. So we're going to go into the sales screen, look at the in-process all report, and we're just going to make sure that everything is truly still in process in that list. So over here in the sales screen, we're going to come down here to in process all, and then all dates. And so we want to look at this by all dates down here. Maybe you have more than one location, so you could switch that to all locations. And I'm going to switch this to the date column right here, just to bring up the oldest ones to the top. So we're looking at the sales in this list, and we want to just look at these, and they should be sales that are truly still in process. So if you come across something that looks like it should have been job costed, that's something you probably need to look at, or maybe you have something still going on from last year. Maybe there's a job that's still going on. I know sometimes there can be delays, but basically the way I have the screen sorted here, this should be a list of jobs that are truly still in process. And then when we're doing job costing, we want to make sure that we're looking at three things. So of course, we open up the job cost button up here at the top of the screen. The next install date right here, this becomes the accounting date for the sale. So we want to make sure we have the right date there. We want to be looking for material numbers and looking at the costs here. And so if we're looking through, making sure things are job costed, all these boxes here in the middle, in the body of the sale next to materials and labor should all be checked. All the lines should say delivered. And when all the boxes are checked, it'll say completed up here at the top. And so when you're looking through, making sure things are job costed, you might see something that looks like it's all job costed, but you want to make sure it says completed up at the top. So there could be something on a line holding it open. So just double checking this list and making sure that that truly is a list of jobs that are still in process. And so this is going to be the first step of all the other steps. And so if you're not sure where to start, this is the step you want to start on and look at this list. And so if you have a long list, there could be some stuff that needs to be cleaned up there. Or if you're pretty confident that everything in that list is still in process, then we can move forward to the next step. So if you have any questions, we're here to help you look at things.
So the reason you're telling them this is because if it's not job costed, it's going to have the wrong sales total amount that's going to be reported, correct?
Right. So if we have some sales in this list that are not technically job costed and completed, but maybe they actually were completed and you thought they were all done, maybe even paid in full. If it's not job costed, it's not hitting your accounting. And so the number one step is job costing. That's what makes the accounting happen. So if it's not completed, it's not in the accounting yet. So it won't be reported in your sales.
Job costing is the single most critical, important process in the software.
And while we're looking at these first couple of steps to just get started on this step number 6 here that we're on, I also like to look at proposals. And so looking at proposals with all dates here, this can be a pretty long list, but I think it's worth spot checking this. I like to add the payment column. So we go over this in other videos, but you can add and remove columns by just holding down your shift key and selecting one from the menu here. So I'm going to add this payment column and sort it by the payment column just to bring any payments up to the top. And so took 2 clicks there just to sort that list. And you can see here I'm in my proposals list. There shouldn't be any payments on proposals. So at a glance right here, this would be something that needs to be cleaned up. If we took a payment from a customer, maybe they're putting a down payment or something, that should be flipped to an order. So we need to find out, why do we have these payments on proposals? So maybe the order got canceled and we need to refund the customer, or maybe we need to flip it over to an order. And so we shouldn't have any payments on proposals. And then I also like to just spot check the receivables list while we're over here and sort it by the date column here, just bringing those older dates up to the top and just looking at this list. This should be a list of customers that still owe you money. So these are completed jobs with a balance. And so we just want to look through that. There's something, over a year old here. Are we going to collect money from this customer, or do we need to find out, something else to do with that balance? So anything in this list should be a list of things that we have customers that owe us some money there.
You want to check your void list for payments.
Yeah, so we could look at void here and sort that payment column. So at a glance, the good news is we don't have any payments on voided sales. So we definitely shouldn't have a payment on a voided sale. Another place they can hide out is over here in the templates list. If you use that feature, a proposal that has the template box marked is going to be not in your proposal list anymore. It's going to be just over here in the templates list. And so looking at this list, we shouldn't have any payments on templates either. So this one looks fine. These are sales down here, so that's okay. Okay, and then so that's step number 6, and that's the first step to get you started on all the other steps.
There's a couple of questions here for you.
Okay.
Kristy, if there is a balance due at the end of the year, do you leave it as uncompleted?
So we would recommend that you keep the sale completed. That's what's going to make it show up in your receivables list. And so at the end of the year, you're going to have receivables, and those are going to be completed sales with a balance. And so you do want to have if the work has been done, they should be marked completed, whether or not they have a balance.
Okay. And then there was another question here, I think. When you job cost the cell and record the sell date, or does it record the sell date or the next install date for the accounting? So I think it's
Yeah, so it's the
question.
next install date becomes the accounting date for the sale. So it doesn't matter when the sale started. It could have started several months ago, but whenever it actually completed is going to be the accounting date that it hits your P&L for revenue.
QFloors does only accrual basis accounting. If you're not familiar with that term, you can do a little Google search on it, understand it some more. It doesn't do cash accounting. And on the sales side, it's based on completion. So what Kristy is explaining there, the next install date, the date the work was done is the accounting date. Completion method of accounting for sales.
So there's a difference between written cells and completed or accounting cells.
Yep.
Mm-hmm. Yep.
So,
And so looking at the total sales is going to be all of your written sales. So these are sales whether or not they're completed. If you have sales that are in order status or ready order status, those are your written sales, but they are not hitting the accounting yet until they're completed.
Okay, another question. How do I add the payments column to the top of the list?
Yep. And so any list window, you can just hold down the shift key on your keyboard. If you see where I have the mouse right here, you can just hold down the shift key on the keyboard and then click with the mouse to bring up the menu. Whatever is in this list, you can insert. It'll insert to the left of where you click. So if I wanted to add another column, it's going to insert to the left of the one that I clicked on. So if I wanted to add something like balance, and then this little text alignment, this is to line up the column. So I like numbers to the right. And then that just inserted another column so you can adjust columns.
Another question here. I'm showing lots of payments under the templates list, but are there actually jobs? Should the template box be unchecked?
You definitely can uncheck it if you want to. It's just making your template list long, but it's not affecting anything. So if these are really sales and they've been job costed and they have payments on it, it's okay that that template box is checked. It's not really affecting anything other than just it's showing up in your templates list. No, you don't need to go through and uncheck all those unless you want to. Just make sure the ones that are proposals marked as template don't have any payments.
Last question. If you need to cost an old job, do you need to use today's date in the install area? Posting in an older date would mess up closed months.
Yeah, that's definitely a delicate situation. And so we don't want to just backdate something, even if it really did happen, let's just say in, I don't know, December 2023. If we job cost it now, it is going to hit the financials for that date, whatever you put in that next install date. But then other things that are going to happen, it's going to hit your sales tax report, it's going to hit your commission report. And so there's just maybe some things that we want to look at and make sure, maybe it does need to be job costed with that older date if that's accurate and you haven't reported it yet. But I guess I've seen some situations where we definitely don't want to backdate it.
I think most of the time you don't want to if you've closed
Yeah,
books.
especially if we've closed books and if we're closing monthly, job costing it with that older date, that's going to show up on your current sales tax report with that older date. And so that might be something to be aware of.
even if you're not in the habit of closing the journal, you're not in the habit of doing this close period, which again, Kristy will talk about, she'll touch on it later. But if you're not doing that, you should be. But if you're not, and you've got these jobs that were completed in past months, whether the tax return's been filed or not, you probably don't want to change the past month where you've already filed the sales tax return. So definitely don't put these back in months where you've already had your income tax return filed. And I would be careful, considerate about changing prior months where you have filed a sales tax return. You don't want to have, knock on wood, this big if you get a sales tax audit, and if they catch this month where you reported certain dollar amount of total sales to them for that month 2 years ago, and they look at your financials now and they're different because you've closed sales now, you've job costed them and put them backwards into prior months, then it becomes a little bit more ugly of an audit than it started off at. So generally the answer is no.
Go forward, right?
Yeah.
Yep.
Yep. Those are great questions. Okay, let's see where we're at here. Okay, so that was step number 6. The next step, number 7, is to make sure that all the customer payments, vendor invoices, any checks, any transactions that go through your bank account have been posted. And so if you don't put the information in QFloors, it's not going to have the right information. So that's just a reminder to make sure you're entering everything into QFloors. Step number 8 is a good spot check to do. So this is checking for outlying dates. And so basically what we're going to do here is we're going to go into the journal and look for anything that might have been accidentally post-dated into the wrong date. And so if we come up here to edit, go into the journal, and we're just going to switch this to all dates. So sometimes that can be a long list and take a minute to load. That's okay. And then I like
let me interject. I would suggest a custom date instead of all. It doesn't take as long. Do a custom date and do tomorrow through next year end, something like that.
Yeah, that's a good tip. That way you're not loading all of the past years. But so I have all dates here, and then what we're looking for, I just opened up this date column a little bit so we could see the year. Now looking at, here we are in November. You may have accidentally post-dated some of these things into December 2024. So this is, probably a good thing to spot check maybe a couple times during the year. We always recommend doing these procedures more than just at the end of the year. So maybe quarterly or at least more than once. But if you, in January, as you're getting used to the new year, this is usually when you accidentally post date something all the way into December of the next year. And so you just want to make sure that these should be there. So maybe there's a reason we put these bills in and those dates are correct, but that's probably something to look at, as we do have these couple transactions that are dated past today. And so maybe go look at those bills and find out if they should be there, or if they were accidentally dated in the future. And to do a custom date, you would just do like custom date here. Oop. Hit the wrong button. And then you were saying tomorrow's date, so through just the end of the year, or I guess you could go.
Yeah, end of the current year, end of the following year. Just stretch it out a little bit.
Yeah, and then that way we would see if there was anything accidentally post-dated still. So anything that we see right here is dated past today, so it probably shouldn't be there. And then you can see the bill number. You could go look at the bill. You could see this one's a payment. You could go look at the payment. So that's the sale number. And so basically that step is to go look for those. If you don't see any, then you're done with that step. But if you see anything, then you go and investigate it and make any corrections. Okay, so those are the first steps there. Now there is a section here, there's some reconciliations that we have that go over these 6 system accounts. So the system accounts are accounts that the software is automatically using. So as you're using QFloors day-to-day, job costing, taking payments, things like that, these accounts are automatically getting hit with entries. And so these accounts can't have any manually created journal entries. If for any reason you needed to do like a year-end journal entry or even a GL conversion, if it hits these accounts need to be reversed, or whatever that journal entry is needs to equal 0. So you reverse it back out of there.
You want to mention to your accountant that especially after you've done these end of period procedures and the GL conversion's been done and your accounting balances are correct, mention to your accountant that they should not be adjusting any of these accounts.
And as we go through these reconciling procedures and running some tools, we are reconciling accounts, not any particular year or any period. So even if you, for whatever reason, are catching up and still working on closing out 2022 or 2023, whenever you're running these tools, it's running and reconciling for the entire history of the software, not through not just in this period. So if we find an old problem, we do need to fix it and make sure everything's running smooth. There's some dates we're going to talk about to use in these procedures. And so right now, we're still in 2024 right now. And when we're running these tools, we typically will run them with, you can run them with today's date, and then we're going to run them again with just the end of the current fiscal year. And so right now, and as you're doing these throughout the year, you can just run them with today's date, or a current date. If you know you have a transaction that's dated past today's date, you need to run it with a date that's past any transactions. So sometimes in the accounts payable reconciliation, you might have a bill dated into, let's say December. That's going to flag a problem. And so if it's supposed to be there, that's fine, but the tool is going to fail. So we just want to make sure that you run it with today's date so you catch anything that's not supposed to be there, and then run it with the end of the current year just to make sure everything's running smooth for the year. Let's see. Did you want to add anything here, Ron, in the
No, just
dates?
that's what you said. Yeah.
Okay.
No, that's good. Just that if you have any transactions post-dated that are legitimate, then you'll run it, like you said, first for now, and it'll show those those post-dated transactions as problems, but fix anything else that it finds, and then run it for after those post-dated transactions to make sure it's all in balance.
And then if you're in January or later, once we're in 2025, that you can no longer run these tools with the 2024 date. So even though you'll be getting ready to close out 2024, you'll have to use the date 2025 to run any of the tools we're going to talk about. So we'll go through that, but you can't backdate those tools. I'll just point out this real quick. So using the financial reports in QFloors, you're probably familiar with some of these reports. Let's see what I can pull up fast here. Oh, that was a good one. Okay, so that wasn't a good example. But what I wanted to show you is when you pull up a report in QFloors, you can double click to drill down on transactions. So here's something that has something in it. So if we double click on something here, I can double click and it pulls up the general ledger, so you can see exactly where those transactions are coming from. And then from here, I can double click and see where that transaction's coming from. So that took me to undeposited funds, and then whatever transaction I clicked on took me to this payment window where that payment is hitting undeposited funds. Okay, and then going through these reports here. So this does recommend printing to PDF instead of paper. So some things like bank reconciliations, we always recommend printing to PDF. And then that way, if you do need to print it again, you can always pull up that PDF and print it again. And just real quick on backing up your data, it's always a good idea to make sure that you're manually making backups of your database. So even if you have automatic backups in place, it's a good idea to make sure you're doing a manual backup just to make sure that you have a backup. And so we have some different instructions here. There's instructions on our knowledge base about setting up automatic backups and some other things here. about backups. But these are the steps, and it really is as easy as coming up here to file and then backup. And then just depending on where you're at, in some cases you need to be on the server to make a backup. And then make sure you know where you're saving the backup. Okay, so this leads us into inventory reconciliation. So inventory is kind of a whole thing. Now, this is one that needs to be done before the end of the year. We always recommend making sure that you're cleaning up your material screen, making sure all the materials are connected to bills. There's a cleanup stock button that we'll talk about. And then, of course, doing a physical count. And so we do recommend that you physically count your inventory, do a count, and then come into QFloors and reconcile it to what's in your material screen. And so over here in the material screen, looking at the different lists here, purchase orders should be a list of things that need to be ordered. This database has kind of a lot of stuff here, so it looks a little bit long. We shouldn't have all of this stuff in the purchase order list. It should be just a list of things that need to be ordered that haven't been ordered yet. Anything in the on order list should be stuff that's actually on order. So if we just placed an order, we haven't received it yet, we should be able to find it here in the on order list. And then once it comes in, you're going to check it into stock by finalizing receiving. And then if we jump over here to the no bill list, so up here, the no bill list is important to look at just the way that the accounting works behind the scenes in QFloors. It's really important that everything gets connected to a bill. And so there shouldn't be a lot of no bill cleanup. You definitely shouldn't have no bill cleanup every year. Sometimes there's some things that happen like job leftovers and remnants and things like that. So we probably need to talk about how to create remnants in QFloors properly so you don't have a lot of no bill cleanup. But really the only time you should have a lot of no bill cleanup is when you're new to QFloors. So if this was your first year using QFloors, at some point you needed to enter all of the inventory of your existing inventory, and all of those things, of course, you probably already paid for on a different bill. And so there's no bill in QFloor. So that would be a reason why you have a long no bill list. And so there is a procedure for cleaning that up. So we have a document called no bill cleanup. You probably talked to us about how to do that at some point. But looking at this list, this is pretty long. This needs to be cleaned up. And one thing I like to do is add, so again, we're adding columns here, holding down the shift key, and then I'm just going to click on create date. I think that's a pretty good gauge to see how long this stuff has been in here. So if we just ordered it, it's okay if it's in here if we haven't got the bill yet. But if there's stuff going all the way down here to 2023, 2022 even, all this stuff needs to be cleaned up. So there's some different situations on how we would clean up each thing. And I think usually we talk about when you're new to QFloors, you know, we have this kind of way we enter a PO. So this isn't the best example here, but this B4, like B4 QFloors, and then we have an easier way to clean it up. In this case, we would have to go through everything, get it connected to a bill. But if you don't have all this new stuff, maybe you're not new to QFloors, but there's some stuff over here in the no bill cleanup, we want to look through and see if it should be here. You know, maybe you've created a material number by mistake and it doesn't need to be here. So here's a material number. It says it has a balance. It's not connected to a bill and it's not connected to any sale. So maybe this was a mistake and we don't need it here. In that case, you could just send it to gone. And no accounting's happening for it. So if we have anything that maybe it was on back order, the order was canceled, we just need to get rid of a material number, you can definitely just send it to gone. You do have to send them to gone one at a time in that case. So there's a little bit of cleanup you can do there. Anything else? Ideally, it's getting connected to its real bill. So if we just ordered this from TriWest, we should be expecting a bill from TriWest and getting that connected to the bill when we receive that. Ron, was there anything you wanted to point out over here in the no bill list?
No, when they're going through the procedures, go look at that knowledge base article that talks about how to clean this up and talk to client services with questions and any
Yeah,
concerns you might have before you do it.
I can definitely think of a few different scenarios that come up. And so definitely give us a call if you run into something you're not sure about. But basically, we can get rid of anything that doesn't need to be here if it doesn't exist. But if this is something that you do have, we want to, see if this is something that you really do have. And then maybe we leave it here, give it a PO number or something so we can recognize it easier when we're in the bill screen. But that would be a good candidate for what we're calling no bill cleanup. So there's that knowledge base. You can search no bill cleanup. And basically we need to get everything connected to a bill, or ideally it's real bill. The most accurate would be to get it connected to its real bill. Okay, so I'm going to jump back over here to the stock list. And so the stock list should represent your physical inventory. So if you do a physical count, we're looking at this stuff in the list here. This should be stuff that we actually have. Now, a lot of it's going to be assigned to sales. So like this one says it's ready, right? So this is assigned to a sale, it's ready. It's still physically here, it hasn't been job costed yet. So maybe we have this in a different area of a warehouse if you have a warehouse. But this is still part of our inventory right now. There is a cleanup stock button. And so if I go back to make sure I'm following the instructions here. So these instructions go through the things that I just mentioned. So make sure you've done the preliminary tasks that we talked about, like the job costing on step 6 up at the top. There's a cleanup stock button, and then cleaning up the purchase orders, on order, and no bill list. So that's what we just talked about, were these few steps. And then I'm just going to point out this cleanup stock button down here. So down at the bottom of just the stock list, this is the safest way to clean up your stock list. So this will only change inventory to gone when the item's been assigned to a bill and the physical balance is 0 or whatever you put here. So it's totally safe to leave it at 0. So it's basically checking for 3 things for you. It's checking to see if it's connected to a bill. It's checking the physical balance and if it's job costed. So if it's not job costed, it's not going to send it to gone. So you do need to run this for all 4 unit of measure. So I'm just going to start with each and hit start procedure. So down here, you can see it found something. So it's showing me the material number that it found. I can change one at a time, or I can hit change all. I like to hit change all. It's just going to buzz through and sweep everything to gone. Start procedure. So I'm just changing it to the next one. So just depending on how often you do this, it'll find a lot, or it might just find a little bit. You can see it's kind of just buzzing through and sweeping those things to gone. So we're completely done with them. We don't need them in our stock list anymore. And so if I refresh this list, anything that was all connected to a bill and no more was left, everything was completely done, just got swept out of this list. And so if I sort it by the physical balance, you can see I still have quite a bit here in my stock list with a 0 balance. And it's going to be because it's not connected to a bill or it's not job costed. So just depending on, like this one here, you can see it's job costed on a job. There's no more left, but it's not connected to a bill yet. So this is what we were talking about, that no bill cleanup needs to be done here for that to get cleaned up. Let's see, anything else on inventory? Any questions?
So this part here, Kristy, that's talking about cleaning up your stock list and how to fix your stock list items one by one when there's a problem. If there's a balance remaining, but there shouldn't be, do we just change it to gone? So go through this in detail as you're going through the procedures. Do an adjustment. Do an adjustment if the item still exists, but the balance is wrong. Do an adjustment. If it doesn't exist anymore, send it to gone. So that's what that section is talking about. And then, are you going to show the report, the tool?
Yeah, let's look at that tool.
So that would be next. Sorry.
There's a question here. Is there a way to prevent a no bill inventory item?
So as long as you're connecting everything to the bills as you're getting the bills, right? So anytime you create a purchase order, you're creating a material number, that material number is going to be in your no bill list until you receive the bill. So once you receive the bill, it needs to be connected. That material needs to be connected to the bill, and that's going to take it out of the no bill list. So as long as you're doing all of the things that you should be doing, like connecting bills to materials, as you're paying for those bills, and then of course connecting those materials to sales and job costing, you wouldn't really have any no bill cleanup unless you maybe have a remnant or some job leftovers that came back. And so there is a way to create a remnant, connect it to a bill, and it's just a zero bill.
But
And so
in general, if you're having a lot of these, it's because the person that is putting in the bill, the AP part of it, is not selecting or is not connecting the bill to the purchase order.
correct. Yeah, that's usually what I see is either somebody's handling remnants incorrectly, or they're just not connecting the material numbers to the bills correctly. And so those are the two reasons why you would have some no bill cleanup. So if you're finding you have a lot of no bill cleanup all of the time, there's probably some things that you're doing procedurally that's causing it. And so we want to make sure you're following the correct procedures and doing that correctly, and then you really shouldn't have any no bill cleanup. So unless you, for some reason, a manufacturer gave you some free material, and there really is no bill for it, there's not really a reason you would not have a bill. If you ordered something, you're going to have a bill, and it should get connected to its bill.
Yep.
And so doing the no bill cleanup is kind of, I don't know, I want to say a band-aid for the situation. Like it'll clean it up. It's not going to be the most accurate, because when we're making a no bill cleanup bill, it's a dummy bill. We're forcing it to be a zero bill. So it's not doing the proper accounting. And then whatever's in that list needs to be adjusted with a journal entry. So if you're new to QFloors, all this existing inventory gets entered in, cleaned up with the no bill cleanup. We still have to adjust the inventory account to put that in inventory. And so after that, there shouldn't be a lot of adjustments like that. So there's procedures to help prevent big adjustments like that. But I mean, I'm sure there's always going to be a little bit of adjustment that needs to happen.
All right, there's a pretty long question here. I don't know if we can answer this one here. Listen closely. How can we print or download the data in the cell screens that ties to the values in the inventory reconciliation report?
So let's look at the inventory reconciliation report. So one of the steps, and now I feel like did I skip that step? So let's see. So, okay, so we talked about,
Step 8, yeah.
there it is. Okay, step 8. I was
Yeah.
trying to figure out where I was. So running the cleanup. Okay, so I didn't skip it. We're just here. So tools and then inventory reconciliation. So we're going to run this tool. We're going to type the date that we talked about right on the beginning. And then there's some things here if the report fails and stuff like that. But let's look at what it says here. So we're going to look at that report, inventory to GL reconciliation. So this is under the tools menu, and inventory to GL reconciliation. Now, it points you to these instructions that we're talking about. And like Ron said earlier, you can do these steps any time of the month, any time of the year. I'm just going to run it with the end of the current year. And what we're looking at here is where the inventory balance shows in the accounting. So right now we have the trial balance sheet, and general ledger, have this number over here. And then it's comparing this to the stock list. So if we looked at each one of these numbers, this is the stock list, the no bill list, the purchase order list, purchase order connected to bills, on order products connected to bills, and then in process product delivered. So I think this might be, let me just move this over. So if we looked at in process product delivered, notice I'm in the sales screen, in process, product delivered, all dates. This is where it's getting that number. So this is a list of jobs that are not completely job costed. So the accounting hasn't happened to take that out of the inventory account. So it's adding it back in on this report. So I think, does that sound like the direction that question was going?
Um,
I don't think,
How to print the list. So you could print this list, and this would be a list of all the sales that have some inventory on them that's may not be in your stock list, but it's in the accounting still.
they wanted a report, a printout of sales relative to this. Can you read it again, Chad?
yeah. How can we print or download the data in the sales screen that ties to the value in the inventory reconciliation report? As an example, the in-process product delivered totals. The inventory pieces like stock list, no bills, etc. we use shift print, but we can't do that in the cells as it brings up the printed invoice in Q. Oh, I think they have some kind of a report tied to that.
Yeah,
Okay. So
Q
yeah,
reporter.
it sounds like we need to take
Yeah.
a look at your screen and make sure you
Yeah.
don't have Q reporter on
I
that button.
told them to call the support department.
Okay. So
So
this is the list the report's talking about. This is the in-process product delivered. And you can print this list. So if for some reason when you hit print or print should go to your printer, and then if you hold down shift and print, that goes to a spreadsheet. And so you should be able to do that in any of the list windows.
and then we have one other question. This probably needs to be taken offline too, but they're talking about, when you pay for materials with a credit card, how do you connect those to a purchase order?
Yeah, so there are two ways to handle credit cards in QFloors. If you're paying for materials, I would expect to see a bill, let's just say Mohawk, for example. I would expect to see a bill for Mohawk. Okay, we'll say Shaw. How about that? And we're still going to connect that PO with the inventory account to that bill. So we'll have a bill, and then over here in the checkbook screen, you would pay that with the credit card. So this is usually how people handle paying for materials with a credit card. That's what I would recommend. We call that method 2.
So they have to keep a separate credit card account basically and post to that, right?
Yeah.
So that's probably beyond this discussion a little bit,
Mhm.
but I would call into our support department and
Yeah, there is a knowledge base article called something like Managing Credit Cards that goes over method 1 and method 2. I like method 2. I feel like it's a little bit easier to manage. And so
so
yeah, that probably needs to be a
yeah,
phone
that
call.
question, Wendy, if you would just call into our support department, they can help you go through that.
But
It's a
yes,
little
I
bit
I
more
do hear
complicated.
I do hear that sometimes, where they pay for materials with a credit card so they don't think they can connect them to bills, and the answer is yes, they still need to be connected to bills. And so that might be just a question with the
So
trainer over here.
so yeah, I would call in. It's a little bit more advanced, the question.
Okay, so
We have one more.
okay.
I have a bill that is entered and attached to the correct job material. However, it is still showing under the bill screen. What should I do here?
Sounds like it's not connected to a bill.
Or it is still showing under the no bill screen? Oh, the no bill screen. And it's connected. I would say call into our support department too. And let us take a look at your screen with you. Concur? Is that right, you guys?
Yeah, it sounds like
It's
if
showing on the no bill
something's
screen.
yeah, something's already
And
job costed on a job, but it's still showing up in the no bill list. That just means it's not connected to a bill. So you could go look in the bill screen, make sure if that bill was entered and paid, make sure that it gets connected to its proper bill. That's going to be the most accurate thing. And then if
I, I have seen a bug in there sometimes. There might be a bug or something where it's not right. So,
Mm,
anyway, I
yeah,
would
so
give us a call and we'll take a look at it.
and then it could just be, maybe some no bill cleanup needs to happen just to get it cleaned up, and then an adjustment maybe at the end of the year. So it could definitely be a phone call. Okay, and then so once you've gone through, you've done your physical count, you've looked at each of these material numbers in the stock list and done any adjustments, you run that tool. Sometimes it recommends doing a journal entry. Let's see, I'm just trying to make sure we got through everything here. And then once you've done all of the reconciliation procedures for the inventory, we do recommend printing that stock list and these other lists here on December 31st. So whatever the end of your fiscal year is. And that's going to be over here. So if I'm in my stock list, you can hit the print button and that's going to print. If you hold down your shift key on the keyboard and click the print button, it'll export it to a spreadsheet. And so you can call that, inventory 1231. So you know what it is. And that way you always have a record of what was in your stock list on the last day of the year.
Let me come back to the tool, the report itself. This particular database we're using has a good example. The adjustment, let's say that all the stock list cleanup, all no bill, everything has been done, and then thanks, and then and you get to this report and it shows just a huge adjustments needed. Down at the bottom, it shows you to get your accounting balance correct, you've got to make this adjustment down here. In this case, credit inventory and debit materials. If it's a very large amount like that, talk with your accountant. I've seen some companies will take, they'll do part of the adjustment this year, part of the adjustment next year. Maybe they spread it out over 4 years or something like that. So just work that out with your accountant instead of putting the entire hit into the current year, which ideally is most correct, but talk to your accountant about what are we going to do with that. This is necessary to have accurate financials, but are we going to do that this year?
Yeah, and I think this particular database, it looks like it's maybe an example of a brand new customer that just started using QFloors. They've entered all this inventory and the cleanup hasn't been done yet. But then that initial inventory balance does need to be entered with a journal entry. And so that would be accurate if we were saying, whatever database this is started QFloors 12/31/2023, we would do that adjustment, and they probably still need to do their GL conversion. That's what it looks like. I have seen, if you have a big negative number appear in the accounting balance, or if you're constantly, maybe you're running this report a few times throughout the year and you're constantly having to do adjustments. If it's always telling you to debit inventory, then that tells me there's something, maybe in job costing on the sales screen, you're pulling out more inventory than what you're putting in inventory. And so signs of that would be a negative inventory balance, or it always being low, or having to do a lot of no bill cleanup. So we do have a knowledge base article called Inventory Balancing, and that goes over some things that we see people do that can cause a problem in inventory. So one reason for a big journal entry would be, you're new to QFloors and it just needs to be adjusted that first time. But if it continues to happen constantly and you're not sure why it's happening, there's probably some things you could get to the bottom of procedurally to make sure you're doing everything correctly. Okay, I think that's everything we have on inventory. So that's a big one that we want to see done before the end of the year. We definitely have more to cover. So are we okay to keep going, Chad?
Yeah,
Okay.
absolutely. I expected this was going to take more than an hour.
Yeah, inventory is kind of a whole thing. That could be a whole hour conversation, and then just the regular
Yeah,
procedures can be another hour. So,
exactly.
okay, let's see. So inventory, and I don't know if I should go over all of this right now, but we talked about printing your stock list. You want to print the stock list, print the no bill list, purchase order list, on order list, and that in process product delivered report. And so as long as you print those, you would have a record of what's in those screens on the last day of the year. There's not a way to backdate the stock list to see what's in there.
If you also take a backup on that day, right?
Right. Yep. We want it on
So,
the last day of the year, make a backup, name it year end 2024. Okay, so I think I'm going to move on to the next one here. So these ones will go a little bit faster. So this next one is accounts receivable reconciliation. This does not need to be done before the end of the year. So far, inventory is the one that we've talked about that needs to be done before the end of the year. This one does not need to be done before the end of the year. The first step is the step 6 up from above, making sure that you're caught up on job costing. That's the first step of all the steps. We want to make sure you're caught up on job costing. Number one most important thing. Then we're going to click on tools and accounts receivable reconciliation using the dates that we talked about. Okay, so up here under tools, accounts receivable reconciliation. And so this is what we want to see. At a glance here, all the numbers match. So I just want to point out there's some 5 numbers here and they all match. And so we want to see success down here at the bottom of the report. So this is what it looks like when everything's fine. So if you get to this step, then you're done with all the other steps. And then you can print your general ledger summary report for the period that you're working on if you're working on year end. But mostly we want to make sure this runs. There are some things that could happen, like it says here, if the report fails, if the trial balance or balance sheet or if the summary and the detail doesn't match. So I have some examples of what that could look like here. So if you can see that. This is an example of one of the tools failing. So if it just looks like this and it says failed, not in balance, it's really not necessarily what tool, whether it's accounts payable or accounts receivable. It just means that something's out of balance and you can't move on until you fix this. There are some instructions on how to fix that. So if you have that problem, it does say to go down to another section here in this document. So let me just scroll down real quick. Just a few steps to go through here. Right here. So there's some steps to help you find and fix whatever the problem is that's causing your trial balance or balance sheet to be out of balance. 9 times out of 10, it's something simple like a red save button somewhere like in the bill screen. So it's usually pretty easy to find and fix. Let's see what else I have here. So this is an example of, let's see. Looks like this is accounts payable, but we have an example of the general ledger doesn't match the bills list. So it's showing a list of bills here that might be a problem.
Yeah, generally when you run these reports, whether it's accounts receivable or undeposited funds, doesn't matter. Those 5 numbers should match. If the first four match, that's great. That's good. If there's a problem, the next report shows a problem when the detail doesn't match the summary. But those 4 should match. And then that says all the accounting reports have the same balance. That's expected. But the list of transactions no longer matches the accounting numbers. So that's what this one's pointing out. And it could be because of transactions that need to be reviewed. And so it'll list them there. Some of the reports will list transactions that specifically are probably contributing to the difference.
And then we have this. This is an example of the general ledger detail and the general ledger summary are not matching. And so this balance it should be the same balance in all 5 places. And so if there's a difference, we have to find it and fix it. And so these instructions do point you to some things to look at to help you find and fix whatever's going on. So this is general ledger summary report, the detail or the summary aren't matching. So there's some things definitely to look at here. There's a secret double right click at the top of the report. So I don't think we're going to go into exactly how to run those troubleshooting steps, but if there's a problem between these numbers, there's more instructions. And of course, sometimes it takes a call to us to look at it with you. Let's see, so accounts receivable. And so just looking at this and then making sure that whatever you do have in your receivables list over here is accurate list of these are customers that still owe you money. So that's where it's getting the balance here. So all these numbers should match. You can see the receivables list balance matches the total here. And then once all of the, oops, let me get back up here to the accounts receivable section. So once the tool runs successfully, then there's a couple steps here after fixing errors. If there's any, you can print the general ledger summary report. And this might be something you want for year end. So if we come in here, general ledger, I'm going to do accounts receivable. And you would do this for whatever period you're working on. So year end. Oh, let me do summary. So I got to click on summary right here to get the summary and then hit enter. And so this is going to load anything that's making up the balance of that account. So this is accounts receivable. So it's a list of sales with balances. And then down here at the bottom, if you can see, some of these aren't coming from sales. There's some journal entries in here. And this is what we were talking about earlier. So sometimes there's a reason to do a journal entry to one of these accounts, but then you can see they get reversed out later. And so you can print or export these reports. Okay, and then undeposited funds. So basically the same step. So each one of these sections has a tool, talks about running the tool, and then same thing if it runs into a problem, we probably need to read through the instructions and see if we can find and fix the problem, and then printing that general ledger summary. So basic same steps. Let's see if we just run that real quick. Undeposited funds is going to be a list of things that need to be deposited. So as you're collecting money, it needs to go to deposit. So over here under items to deposit, that's where you're going to see undeposited funds. So we can't adjust this with a journal entry. These things need to be cleaned up by depositing them into one of these accounts. All right, and then accounts payable reconciliation. Now this one, this is going to be the bill screen, and there's going to be some things that you want to look at in your bill screen. So looking through, making sure there's no old bills with a zero total, zero balance. So there's some things that we want to look for here, and then we're going to run the tool. So coming over here to the bill screen, we want to be in current bills and all dates. And then I like to sort it by the date column up here at the top, just bringing anything old up to the top. And just looking through what's in your bill list here, and this current bill list should be a list of things that you need to pay still. So looking through the balances, there shouldn't be anything here that's super old, or if you see things with a zero balance, let's see if I can sort, like here's a bill. It looks like it has a zero balance. It's in the current bills list. If we look at that report, this is what we're seeing down here on the accounts payable reconciliation. Down here at the bottom is a list of all these zero bills. So they're not a problem, they're just zeros, except for this one that is a problem that's not zero. but all the zeros are not a problem. They just need to be completed. And so sometimes you just need to open and close the payment window just to refresh it. So it recognizes if it's been paid. Looks like this one hasn't been paid, but it's got a zero balance. So just opening and closing the payment window should straighten it out, maybe. Let's see.
That one's a zero bill with
Oh, it's
a
a zero.
payment scheduled for $25 or $84, sorry. So,
Yeah, so this one, maybe we need to just delete that.
right.
And then once I close the payment window, you can see it goes completed. So that, for whatever reason, I don't know why that would be zeroed out, but it zeroed it out and now it's a completed bill. I don't see any other ones here. And then if we run the accounts payable tool, same thing, all the numbers should match and it should say success over here. So if you see all that stuff at the bottom where it showed all those zero bills or a bill with a balance on it, those are ones that you need to go investigate a little bit. It could be a bill that's post dated. We did talk about running this as of today's date and then as of the end of the year. So if I actually run this as of today, I think we do have some problems here. So this is an example of what it would look like if I had some things post dated that I didn't mean to. This is what it's showing me. It's showing me these bill numbers. And if we go look at these, they're dated past today. So sometime in December. So that's something to go investigate, see if it should be there. If it shouldn't, you need to go fix the date. But if it's okay, then we just need to run this with the date of the end of the year and it's fine. So it's all success and there's no problems. And so as you're doing this throughout the year, that's what we were talking about. Run it with today's date and then run it with the end of the year just to make sure they're both successful.
I have a question here. This is a general question about doing this year-end procedures, right? At the end of the year, if we are not done with the year-end procedures, can our staff proceed to write new orders on January 1st, 2025, assign inventory, etc., or should we wait until we finish the reconciles, more specifically, the inventory balance reconcile?
Ron, I'm going to let you take that one. I think.
No, you don't need to wait. You've got customers, transactions, bills coming in, jobs to do, work orders to print. Let's go ahead and do all of that as normal. Yes, inventory should, quote unquote, use that loosely, should be done by the end of the year. It's a big project. It's a huge project sometimes. To go count everything in the warehouse and in the showroom and adjust the stock list and the no bill. So just do what you can. If it comes to where it's going to get finished the following year, that's okay. Just do it anyway. Keep working on it, but don't stop your current transactions. Don't. I always say never get behind on today's work. Do the catch up in all that spare time you have. And if you have some spare time, I would appreciate it if you'd send me some. We could use that here. But just get it done when you can. Just keep pushing. You'll get there.
Okay, let's see if what we have here. So run the tool. Again, you can run into some of those problems. So there's more instructions at the bottom if you run into the problems. Let's see, current bills list. So I think the biggest thing that I find over here in the current bills list is there's something super old. Maybe it's from, let's just say 2022. So it's something old, you've paid the bill, but it's sitting here for some reason with the balance. We don't want to make any changes to a bill that's in a past year. So we wouldn't want to void it or change the balance. You would have to make a new bill in the current period and then reverse it for the opposite amount in the current year. So that goes through that over here in the instructions. I don't know, is there anything else you want to cover here in the accounts payable?
No, I think that's it.
Basically the same steps. You can print that general ledger summary. Okay, and then we have contract labor payable reconciliation. So this is another one we mentioned that should be done before the end of the year. So just so far, inventory and contract labor payable is what we said should be done before the end of the year if you can. And like Ron said, if it happens right after the end of the year, you just do it then and keep moving forward. Now, you do want to be aware of if you have this setting turned on, so under the setup menu and then miscellaneous, post labor on sale completion. So that's what we're talking about. This has to do with contractors. And so we want to make sure that they're set up correctly and we're job costing and we're paying them from the contract labor report. So there's a report here called in process labor delivered subs only. So the software knows the difference between an employee installer versus a contractor installer. So whatever's in this list, this is the list of jobs that are still in process, but we have some labor delivered and we've already paid. So some of these labor lines are already job costed. We want to make sure that our installers are set up correctly. So anybody that's set up as an installer, contractor, notice they have the state filled out here, and that just makes sure they're set up correctly down here. Under gross, if I double click right here, contract labor payable is the account that we pay these guys out of. So we shouldn't see any other account there like, salaries and wages or labor, cost of goods sold. It should be set up this way. And then we want to make sure that we're looking at this contract labor report. So under the reports menu, contract labor, this would be a list of all the installers. And then this looks like it needs to be cleaned up, right? So there's some old dates in here. So if we're going to do this reconciliation, we need to be in a special window of time where anything that we've job costed has been paid, and then there's no lines that have been job costed that we haven't paid yet. And so just to be in the special window of the time for the accounting, this would need to be cleaned up. And then we would compare it to the general ledger for contract labor payable. So as long as we're in that special window of time, oh, let's see, today's date. And then mine happens to have a zero balance. So if we were doing this reconciliation, these numbers should match. So whatever is in this report should match this list. And so in this case, if we were ready to do that journal entry for the reconciliation, we would need to go do a journal entry to make the balance of this account match this list. Is there more you want to go into on this, Ron? Just looking at this one, it's not the best example because we have a debit balance and we probably need to.
If it's the first time that you're adjusting this account, it'll be something like that. It may not be zero here, but it's often there's a difference. And part of it is simply QFloors is going to account for labor differently from QuickBooks and other systems that you were using before. So there's going to be a difference the first time for sure. And this is just putting things on track with the way QFloors is accounting for it. This number here being a positive, this one, like Kristy just said, this should match, the general ledger should match this list. And so that's a debit balance. In accounting terms, there's debits, there's credits. You may not understand that. That's okay. This positive number should be positive to match. If it is a positive number, and it typically runs as a positive amount for you, then we probably want to change this account. Instead of being a payable, a liability, we probably want to change it to, we'll rename it to contract labor prepaid. The way QFloors is handling it, you're paying the installers ahead of completing the job. That's pretty common for most flooring stores, I think, for a lot of them for sure, where you job cost some lines on a sales order, you go to the employee subscreen and you pay them through there, but the job's not finished. So we've paid them ahead of the job completion. And as Kristy talked about at the beginning of this webinar, the accounting happens when the job's completed. And so this labor, this post labor on sale completion. So there's some accounting happening back there when the job's completed. That hasn't happened yet. We're paying the in some cases we're paying the installer though. So that creates a debit balance. We basically prepaid them relative to the timing of when the job completes. So again, if this is a debit balance and it runs debit for you, if you know we normally pay installers ahead of the time and ahead of completing the job, then we do want to change this to a payable, or I'm sorry, prepaid. So just in your chart of accounts, you'd find that one down in the liabilities. And just change this to an asset, current asset. And it warns you that's a system account. Yes, we're okay with that. And prepaid. Hit the warning again and save it. And if you've filed financials in past years with this showing as a payable and it had a balance in those years, then let's talk. We may want to do some things differently to protect those financials and leave them where they were as liabilities and change it moving forward.
We've got a question here. Mine says contract labor prepaid. Is there a difference with the account of contract labor payable?
Yeah, so we're going to treat that account the same. We're going to do the same reconciliation. So you'd still do the reconciliation. That just means that at some point we've done it before, probably with you, and suggested that if you always have a debit balance, we rename it. So that's all that is, and that's okay.
Right.
Go ahead.
Oh, I was just going to say, and when you're doing this reconciliation, as long as you're in that special window of time I mentioned where you paid all the installers and nothing else has been job costed, if you call in, it really just takes us maybe 10 minutes to look at it with you. So it's not a long phone call. It doesn't need to be a scheduled appointment. Just call us after you've done, maybe pay all your installers and then call us. So you're in that window of time where nothing else has been job costed for the next week.
Yeah, if we look at this here, note, I think I made this change to this document last year. The name of the account might be something like Contract Labor Prepaid. Some people say prepaid contract labor, but if it just the concept is the same, and it might be an asset, but these procedures should be done regardless. Okay.
Okay, so that's a good one. Okay, so we have customer deposits reconciliation. This is another one of those tools that does not need to be done before the end of the year. So this can be done anytime. We're going to come over here to tools, customer deposits. And just running this, it should say success down here at the bottom. This one does look a little bit different, but these numbers over here, trial balance, balance sheet, the general ledger has a summary and a detail. These all match, so that looks good. And this number down here matches. So it's telling us where it's getting the numbers here. So this is from the sales screen. These are going to be payments from customers on jobs that are not completed. And so we have orders in the order screen, ready orders in the sales order screen, payments on proposals. So I mentioned earlier that is a problem. So that is a number that needs to be cleaned up. It should say 0 on payments posted to proposal. So that's what we talked about earlier when we added the payment column. So if we go to proposals and payments on proposals, this needs to be cleaned up. So if it's not flagging it as a problem, it's not making the tool fail, but that is something that we need to clean up. And then it does say success down here at the bottom. So everything's fine. We just need to go clean up those payments on proposals. So that one's done. And then printing that summary report after you clean that up. So they're all basically the same steps. And then just making sure whatever those transactions are cleaned up. Let's see, sales tax payable reconciliation. There's not a tool for this one, and this one does not have to be done before the end of the year, but this is a system account, and so there is something happening when you're job costing. We're hitting these accounts, and we just want to make sure that these accounts have the correct balance. And so there's a way to spot check this account and just make sure. So if we come into QFloors, we're going to compare the general ledger. So we're going to general ledger and then sales tax payable. I'm just going to do today's date. So whatever the balance of this account is what I should have in my sales tax report. So if I come over here and do reports and sales tax, these numbers should match.
That's close.
Yeah, close is, what's that saying? Horseshoes and hand grenades?
Sure.
I don't know.
Yeah. So this database we're using is one we have from a customer where there's been some problems, and really they're new to QFloors and we haven't done a lot of cleanup yet. But
or it might look like that if you're not using the sales tax report and handling the sales tax bill correctly.
could be.
So there are some steps here to, make sure you've done the preliminary steps. Shows you how to open up that sales tax report window and compare it to the general ledger. So we're just looking at that and we're comparing those numbers. And if they're off a little bit, maybe it just needs to be adjusted. It could be a rounding difference or an adjustment from maybe, I don't know, a discount or a late fee or something happening. What would you say, Ron, as far as it being, if it's a small amount, it probably just needs to be adjusted. Keeping in mind, this is a credit balance. So if this was a good situation here, where they matched, it looks like a positive number, but technically this is what you owe. And so this negative credit balance over here is what you owe. So technically these are both negative numbers. That makes sense.
Yeah.
And then, anything else you want to add to that one, Ron?
No, that one I don't want to say it can be tricky, but if you're finalizing your reports, when you pay your sales tax and you're creating the bill correctly, then everything should come out right or close. And so if I've never adjusted it before, then there will certainly be an adjustment necessary. If you've done these procedures in the past, it should be right on the money. Look at it, give us a call if they're not, and you're not sure why. Make sure you're creating that bill correctly. Let's touch on that just briefly. Normally, when you're creating the bill to pay your sales tax, you're gonna the first line will be posted to that payable account, and the amount that you put on this line should match exactly the total in the finalized sales tax report, whatever it might be. And then you fill out the state form online, and it comes up with maybe you've got an early pay discount. There's some rounding differences. So if there's just some amount, if you have a discount, then you probably should have an account created for that, an income account of some sort for that. And then any other difference would be posted to this sales use tax expense account. But it really should be a small amount. If you're posting a large amount, if you have a large difference between what QFloors says you owe and what you're filling out on the state form, there's probably a problem somewhere. So give us a call. But that's generally the form of what that bill should look like. So that would help keep things correct moving forward. That you're paying off what QFloors says you all owe, minus a discount, minus any other small adjustment to match the state form, and then go pay it.
Yeah, and there's some other variables that can happen there, like the vendor sales tax paid if you're paying sales tax to vendors and things like that.
Right.
So if you're not sure what we're talking about here, then it might be a phone call that we look at with you. And really, the only time I've seen that account go off is if somebody's using it incorrectly. So they're selecting the sales tax payable account when they're not paying the sales tax to the state. They're selecting it for something else, like paying sales tax at, Home Depot or something. So there's some things you could be doing with that account that would throw it off.
Yeah.
And so this is a good way to spot check it just to make sure, and then find those things that you might be doing and correct them. Okay, so now we have checkbook reconciliation. Again, does not have to be done before the end of the year. So this is something you should be doing pretty regularly. You know, you get your bank statements from your bank account every month. So this is really something that should be done monthly. If you haven't done it all year, then it's kind of a lot of catch up trying to figure out what happened, 11 months ago, and finding and fixing things. So ideally, we definitely recommend doing these reconciliations more often. And so basically all you're doing is comparing what's in QFloors to what's on your bank statement. So if you have a bank statement and you're putting the date from your bank statement, you're putting the balance from your bank statement, beginning and ending, and then checking off anything that you see on your bank statement. So as long as when you're doing your deposits, you should be matching up those batches with what's going to be in QFloors or what you're going to see on your bank statement, so you can reconcile easier. Let's see what it says over here. So make sure you've done the preliminary steps, reconcile the most recent bank statement. So just walking through how to do that reconciliation. And then I think there's this part in here, like if you're new to QFloors or you're about to do a GL conversion, sometimes there's a reason to do a dummy reconciliation. So if there's some transactions in here that are not going to show up on a future bank statement, sometimes there's a reason to clear them with a dummy reconciliation. So this goes through those steps. But basically, when you're doing your reconciliation, you should have a zero difference. There should be zero difference from your bank statement and what's in QFloors. And then if we run the tool here, so there's going to be a tool for each bank account. So right here under checkbook to GL reconciliation. Again, it's pointing you to these instructions because you wouldn't do a reconciliation unless you've actually reconciled a bank statement, or at least a dummy reconciliation to start. And then we just choose one account at a time here. And you could do today's date. I just did the end of the year. But basically it's showing us all these numbers match. And so all the places in the software where this number is displayed should match. And then it's comparing it to the last time that you reconciled from your bank statement. And then we have any uncleared checks and deposits, and looks like we're a penny off. So we probably would correct that and do a journal entry to correct that penny off, because it's a penny. If it was more than that, maybe there's a transaction in there that was duplicated, it's throwing it off. So you might look into why you have a difference. And there is a knowledge base article that this points to, letting you know if the tool it's successful, but it's recommending that journal entry, there's a difference. This has some things you could look at to see why you might have a difference. And in some cases, it just needs to be fixed with a journal entry. If you do a journal entry, that's something that's not going to show up on a bank statement. So that's something that would need to be cleared out of here with a dummy reconciliation before you run the tool again. So you would do that for each account. Let's see. Anything else on that one that you want to add? Any questions?
Oh, that's good.
Okay.
Before you close the journal, I've got a question here
Okay.
that popped up. If there's a difference on the contract labor reconciliation, so we're going back here a couple of sections, right? Contract labor reconciliation. Is there a way to pinpoint where the transaction was done? Why go into the journal entry without trying to find the issue?
Yeah, that's a valid point. You should maybe do a little bit of digging to find out where the transaction came from. And so it could be a number of reasons, and sometimes pinpointing it, it's kind of like looking for a needle in a haystack. I've definitely helped somebody find a penny that was off, and we found it. And 94% of the time it's somebody over here in your contractors is just not set up correctly. So if we look at, maybe somebody started later in the year and we just added them real quick. If we're not setting these up correctly, that's going to be a big reason why it's off. So if this is a contractor and we're job costing on sales, it should be set up as a contractor. Oop, stick. And then down here, the account, if I double click, it shouldn't be just any payroll account. It has to be that contract labor account. And so making sure that all of your setups are done correctly. So over here in your installers, making sure that they're all set up correctly is one step to just making sure that it's going forward, it's going to be correct. A handy way I like to find, I've kind of a little secret way to find the problem. If you look at your employee pay totals report, look at contractors, and then maybe run this for the year. Okay, so this isn't the best example here, but this would be a list of all of your contractors that you've paid and any accounts that you've paid them under. And so let's see if I can just get some data to show here. Nope. Okay, so if you're using the employee subscreen to pay your contractors, you would see some information here. You'd see all of their names. So all of these guys' names and what account you paid. So what we should see is contract labor payable with any dollar amount that you've paid them. If you happen to see salaries and wages or labor or anything else that's not just contract labor payable, that's a good clue that that guy at some point of the year was set up incorrectly and we can go find and fix it. And so you can definitely go over to your employee sub screen, your bill screen under the employee sub list. Right here, there's a list if you created a bill from the employee subscreen. And you would find, you could filter it by just that guy's name, and you would find any bills that have the wrong account selected, and it will let you just change the account over to contract labor payable. So that's usually what happened, is the guy's just not set up correctly. No matter what, when you job cost it, it's going to hit contract labor payable. And then if we're not paying them out of contract labor payable, it's going to cause that difference. So you can do a little bit of digging to find and fix it. Another thing I've seen is maybe you've paid somebody out of that account that's not being job costed on a line item. Maybe you have somebody that comes and mows the lawn or some other type of contractor that came and fixed your refrigerator. I don't know. But somebody that's not being job costed on a sale line item should not be paid out of that contract labor account. So if we looked through the general ledger for that contract labor account, we should only see these guys' names that get job costed on a sale, not anybody else's names. And so that's another thing that could throw it off. So we can definitely look into some things. And another thing that I found throws it off that I can't pinpoint would be if you had just turned on that feature and then maybe for some reason you went and unjob costed and rejob costed an old job, it's going to redo the journal entry hitting that account where before it didn't. And so there's some things that could cause it to go off like that. But once you've found and looked and fixed anything you can find, there may still be a difference that needs to be adjusted. So hopefully that answers that question. Okay, anything else before we move on to closing the journal? Okay, so closing the journal, closing the period. Basically, closing the journal is just going to password protect anything in a financial period. So for sure, if we go into QFloors, we should see, let's see, we're in 2024, so we should see 12/31/2023 closed. So let me do that again so we can see file. So up here at the top under file, and then close period. That brings up this little window here. And if you see a really old date here, like 1970, it's just a non-existent date for the software. It's just older than the software. So that means it's never been closed. If it's opened here or closed as of, I don't know, 2016, that means it hasn't been closed since 2016. And all these last years have been wide open to accidentally change. So we do recommend closing the period. And what we would recommend is, you know, here we're talking about going through all these procedures, running the tools, do the cleanup that we talked about, and then maybe sometime around the 10th. So by the time we get to January 10th or 15th, it's about time to close 2024. And so basically you're just closing the period as of whatever date you put there. So before you give your accountant any financials, you want to close the period. So if you're going to print your balance sheet, P&L, whatever you're going to print, you should close the period, and that's going to prevent anything from accidentally changing between the time it takes him to do your tax return and get those journal entries back to you. So you can open it back up. You can still see everything. You can still go through everything. If you try to job cost something and it has an old date on it, it's going to warn you. So you'll get that message on the screen saying it's in a closed period. Are you sure? And you can open it back up with your password. That is access protected. So only high level access should have the ability to close the journal or override that with your password. But basically it's kind of a soft close. So you can close the period, not worry about it, and then open it back up to do any final journal entries and then close it again.
If you find that, well, if you're not closing the journal, or you haven't closed it in a long time, and you're doing these end of period procedures so that you can have accurate financial reports to give to your accountant to do the tax return for this year. Do the procedures, but then you have to have a general ledger conversion done. General ledger conversion is what we call adjusting your balances so that they match the official balances for the company. So in this scenario, I'm doing end of period procedures now so I can submit accurate 2024 financials to my accountant next year, early next year, so they can do the tax return. They haven't been closing the journal, then you need a general ledger conversion dated as of December 31st, 2023 to get those balances correct. They need to match the tax return basically. So you and your accountant can do that. We can do that for you. We charge $200 an hour to do a general ledger conversion. They're typically an hour and a half or so, depending on the size of the company, the number of accounts you have. But that has to be done. Year 2024, you can do the end of period procedures and get these 6 accounts reconciled and be correct. But your overall balances are not correct because you left the period open. Changes have certainly happened. Your ending balances from the last year are not correct. Therefore, your balances for this year are not correct. So again, do the end of period procedures, have a general ledger conversion done as of the previous end of year numbers. Got another thought. I can't remember it now, but that has to be done. Oh, I know the other thought. Let's say you haven't been closing the journal, just start closing it. Even if you're still working on the end of period procedures and some cleanup, like this has a very long no bill list, or maybe you have a very long in process all list with old transactions, just start closing the journal now. Just close the instruction there that Kristy was looking at in the document links you to another knowledge base article that talks about more directly, more extensively about closing the journal. You really want to close monthly. That's our hope for you, is you'll start closing monthly. So when you look at this really should say 10/31, about the 10th or so of the month. So we're almost there. Early in the month, close the previous month. Just start doing that. And to protect the numbers that you have and are working on, let's stop the bleeding, so to speak. Let's stop the changes to past months and years. Just get that cut off and move forward, get things cleaned up, and then your protecting past financial numbers, and you're protecting transactions that really shouldn't change. You don't want people changing them. Start getting them in the habit of, once it's done, it's done. And then procedurally, you'll catch things where someone's coming to you because they're trying to job cost or unjob cost a sale to add some labor or material that they missed from 2 months ago. And so you're catching things. Why didn't we have this on the sales order before, or whatever the situation might be? Closing the journal helps you in those kind of two facets, protecting the financial numbers and smoothing out procedural things. Catch those.
And then one thing I want to point out in there too is there is an option to permanently close. Typically, we recommend not permanently closing because permanent is permanent, but just doing the regular close right here, just changing the date, is password protected. So if you're going to change something, you can with your password. So you would know you're changing it. If you permanently close it, you can't open it back up with the password. And so you can permanently close it, but typically I don't see people doing that every year. Maybe once, to finalize something, in a couple of years ago, that we absolutely don't want anything to ever change. You could permanently close, but even if you found something silly like a zero bill, you wouldn't be able to fix it or clean it up if you don't, if you permanently close that period. And so I always recommend just close the period. You can always open it back up with your password. I find at the end of the year, a lot of people are really hesitant or afraid to close the period. It's not finalizing anything. It's not changing anything. It's not doing journal entries when you're closing. It's just protecting that financial period. So if you do change something, you just know you're doing it. Okay, so that's closing the period. So now we have printing financial reports. So there's some reports that you can print. If we come over here under the reports menu, AR aging, AP aging. I don't think we need to go through showing each of these reports, but basically when you're all done, you're going to print some reports. And I think that's it. Is there
That's
anything
it?
else?
It was only 2 hours.
I mean, that was a short training on
A
closing the
short
period.
2 hours.
Yeah.
For a programmer guy, it is a long 2 hours.
I bet you know more about accounting than you even thought you wanted to.
Yeah. No, it's great. Thank you so much, you guys, for taking the time to go through all that. Go ahead,
Sorry,
Ron.
I was muted and didn't realize it, and I can't get the screen back up. So I do want to mention this part, right? These two parts here. You're going to submit financials to the accountant, and they're going to work on things. They're going to come back to you with some adjustments. This needs to be fixed. That needs to be fixed. Do those fixes in QFloors, but you've already closed the journal. It's okay to go open the journal, open that closed period, just put in an earlier date and make the changes, or there's an override password that you can put in to make changes in a closed period. This one's really important. After the tax return's been filed, the accountant has come up with adjustments to certain accounts. There's depreciation, there's other interest expenses, there's other things that you need to get back from the accountant. You've got to stay on top of it with them, that if they don't send back to you, here are the adjustments to the financials that you gave me. If they don't come back to you with it, then you've got to go get it from them. You've got to make sure you get that. And then it's a journal entry in QFloors to enter those adjustments. You've got to create a journal entry to force QFloors to have the changes that they made, so that now your financials match the official financials from the accountant.
So making the last adjustments after you get your
Yep.
income tax
Yeah.
return.
Okay.
All right. Well, thank you so much. Yeah, and I know there are some of you that still have some questions that we kind of pointed you to our support department. And I think we got them mostly covered here though. And thank you guys for taking the time and just walking us through this. it's really important that we finish things off good. I will say, there's a couple of other things that are happening. 1099 printing will be coming out with that after the first of the year. Things have changed where you don't print on forms anymore. You've got to electronically file. I don't know if everybody's aware of that. So we'll be coming up with more information on that, maybe another webinar. The care tax for all you guys out in California is changing again. So congratulations, it's up over $1 now. So that'll be changing here, coming in the next month or two. So we're aware of all those things. So there will be some good things coming out. We have some new announcements, and so stay tuned. We'll get you taken care of. Thank you so much, everyone.
All right, thank you.
All right, we'll talk to you all later.